Welcome to The Explainer. Today, we're diving into something pretty wild, a stock market where just one person's job announcement can literally make or break fortunes. We're talking about Nepal and the incredible influence of its finance minister.
So here's the big question. Can a single political appointment really cause a whole country's stock market to soar or totally crash? You might think that sounds like an overstatement, but in Nepal, it's a reality. We're going to dig into why the appointment of this one person, the finance minister, seems to hold the financial fate of thousands of investors in their hands.
So get this. On March 31st, 2023, Dr. Prakash Sharan Mahat gets appointed finance minister. And what happens? The NEPSE index immediately jumps 200 points. Now, this wasn't because of some great economic news or amazing company earnings. Nope, it was a rally based purely on the perception of this one guy. And look, this isn't a one-off thing. It's a pattern, and it's a powerful signal that, in certain markets, politics can just completely overshadow the fundamentals.
Okay, so to really get a handle on what's going on here, let's look at a few case studies. We're going to break down 3 totally different appointments and the wild, often completely opposite reactions they triggered.
All right, first up, let's talk about case number 1, the disciplinarian. This is Dr. Yubaraj Katiwada, who took the job back in March 2018. And let me tell you, his reputation preceded him. He was known as a strict regulator, and that sent a very, very specific, and for a lot of investors, a pretty scary signal.
And the impact? Whoa, it was immediate, and it was brutal. The index just plummeted by around 12% in the first few weeks. That was the most negative, the most bearish reaction the market had to an appointment in this entire study.
And this is the crucial part, right? Investors weren't reacting to some new law he passed. He hadn't done anything yet. They were literally trading based on his reputation alone. Just the fear of stricter rules, the fear of higher taxes, that was enough to cause a massive capital flight, especially out of the risky stuff like hydropower.
Okay, now let's do a complete 180, from fear to, well, the exact opposite. Let's look at case number 2, the bull. This is when Bishnu Prasad Paudel was appointed in October 2020. The market's reaction could not have been more different. So if Katiwada screamed discipline, Paudel screamed, let the good times roll. Investors saw him as super business-friendly. They started expecting cheap money, easy loans, the works. And that perception, all by itself, was enough to kick off this massive, historic bull run that pushed the index over 3,000 points. But, it's not always so black and white, right? What happens when the signal gets kind of mixed? That brings us to our third case, the wild card. This is Janardhan Sharma's appointment in July 2021. The market thought it had him figured out, but turns out there was another major force at play.
So at first, the market rallied. Investors saw Sharma as another pro-business guy, another bull. But then, plot twist. The central bank comes in and drops this 412 crore rule. Basically, it put a hard cap on how much money people could borrow to buy stocks, a max of 4 crore from one bank and 12 crore total. For the big-time investors who were really juicing the market with borrowed cash, this was a massive speed bump. It created a direct conflict with the minister's supposed pro-growth vibe.
And the result of that clash? Well, all that initial excitement just slammed into a regulatory brick wall. It led to what people now call the Great Correction. This is such a perfect example of how even a super positive, pro-market perception can get totally torpedoed when the actual regulations don't line up.
So, okay, how do we make sense of all this? These wild swings, these contradictory reactions? It really boils down to 2 forces that are always pushing and pulling in the market. But here's the thing, one of them acts way, way faster than the other.
Here's a good way to think about it. You've got your macroeconomic fundamentals, the boring but important stuff like interest rates, inflation. That's kind of like the slow-moving foundation of the market. But then you have investor sentiment. That's the fast-acting trigger. An appointment like this, it's like pouring gasoline on the fire. It's what causes the overnight explosion.
So when you step back and look at 8 of these appointments over the years, something really cool happens. You start to see these super clear patterns emerge. It's almost like the market is playing by a secret set of unwritten rules.
And we can actually decode these rules using 2 pretty simple frameworks. It's all about categorizing not just the sectors of the market, but the types of ministers. Once you do that, you can actually start to get a sense of how the market is going to react.
Okay, check out this first framework, the sector market matrix. This shows how different parts of the market totally freak out or don't to a political change. The two you really have to watch are commercial banks and hydropower. Seriously, how they perform in the first 10 days after a new minister is appointed is an almost scary accurate predictor of what the whole market will do for the next month. Why? Well, think of them as having different jobs. The banks are the market anchor. They're the solid foundation. If they're stable, the market feels confident. But hydropower? That's the speculative engine. That's where all the high-risk, high-reward bets are. Its movement tells you how much greed is in the air.
And that brings us to the second framework, the Minister Market Matrix. This is where we see the 4 archetypes of finance minister, and this has nothing to do with their political party. It's all about the psychological vibe they give off. You've got the bull, like Paudel, who signals easy money and sends the market soaring. Then there's the disciplinarian, like Kadiwada, who makes everyone fear strict rules and the market tanks. You've got the wild card, like Sharma, who creates chaos and confusion when his words don't match the rules. And finally, the safe anchor, like Mahat, who basically tells the market, hey, let's just calm down and focus on stability, which brings things back to an even keel.
Okay, so we've looked at the case studies, we've decoded the patterns. What does this all mean? What's the big takeaway here for anyone trying to understand this market, or really any market where politics is such a huge deal?
All right, let's boil it all down to the essentials. Here's what you need to remember. First, in the NEPSE, a minister's reputation is a more powerful short-term signal than any economic data, period. Second, investor sentiment isn't just some fuzzy feeling. It's the main event. It can totally steamroll the actual economic fundamentals for weeks, even months. Third, for the first 10 days after a change, forget the main index. Your crystal ball is the banking and hydropower sectors. Watch them. And finally, and this is the big one, stop analyzing policies and start analyzing archetypes. The market is reacting to the story it's being told, not the numbers on a spreadsheet. And all of this leaves us with one last, really crucial question to think about. In a market that is so obviously driven by human perception, are you betting on economics? Are you betting on psychology? It's a powerful reminder that sometimes the most important variable in finance isn't found in a report, but in human nature itself.